A lot of people feel like their credit is just broken, like they're years away from being able to buy. Is that usually true?
No, it's almost never as bad as people think, and it almost always moves faster than people expect. I work with buyers every week who came in assuming their credit meant years of waiting. Most of them were buying within 6 months, some within 90 days. Credit is not a life sentence, it's a score, and scores are engineered once you know how.
Why does this topic matter so much? A credit score is just a number. Why does it have such a big impact on buying a home?
Yeah, the credit score matters so much because it's directly connected to your interest rate, and your interest rate determines your payments for the next 30 years. Here's a concrete example. On a $400,000 loan, the difference between a 680 credit score and a 760 credit score can be 3/4 of a point on rate. That can translate to roughly $200 per month in payment difference. Over 30 years, that is $72,000. So when I tell the buyer that working their score up 40 points over the next few months is worth focused effort, I mean it in real money. It's not abstract. There are also minimum score thresholds for different programs. 580 for FHA, although they can go as low as 500, 620 for most conventional. Getting above these thresholds doesn't just save money, it opens doors.
What do most people get wrong about how credit works when it comes to mortgages?
So there's two big ones as it relates to what most people get wrong about mortgages and how credit affects it. First, that their consumer credit score is the same score the mortgage lender uses. It's not. Mortgage lenders pull a tri-merge report, scores from all three bureaus using a specific mortgage credit scoring model. The number you see on a consumer application is calculated differently. So it's a useful general indicator, but it is not what the underwriter sees. I've had buyers come in thinking they had a 710 credit score and their mortgage score came back with us at 668. That changes the whole conversation. The second myth is that checking your own credit hurts your score. It doesn't. Self-checks are soft inquiries and they don't affect your credit score at all. The inquiries that matter are when you formally apply for new credit. Knowing your score before talking to a lender is always smart.
What actually moves a credit score? Walk us through the real levers.
Yeah, so 5 factors drive your credit score. Payment history is the biggest. It represents 35% of your score. On-time payments build it, late payments damage it. Even one 30-day late can drop a score significantly depending on the profile. Credit utilization is the second biggest at 30%. This is the ratio of your balance to your credit card limit on revolving accounts. If you're using 80% of your available credit, your score reflects that as risk. Getting utilization below 50% and ideally below 30% can move a score meaningfully within a single billing cycle. Length of credit history is 15%. Accounts in good standing that you've had for a long time are valuable, so don't close old cards just because you don't use them. Credit mix and new credit makeup are remaining 20%. For a buyer trying to move their score quickly, the fastest levers are utilization, pay down balances, and disputing errors. I've seen a score move 40 points in 45 days from those two actions alone.
Tell me about someone who came in with real credit challenges and actually got through it.
Yes, a real life example of credit issues. So I had a client come to me, mid-30s, solid income, wanted to buy his first home. His score was 601 when we first checked. He had 2 credit cards, both near their limits, and 1 old medical collection on his report he didn't even know existed. At 601, his options were limited, so he decided to spend 60 days improving the score before filling a real application. He paid both credit cards down to under 20% utilization using money he had in savings, and we sent a pay for delete letter on the medical collection. The creditor agreed, removed it, and that alone moved the score 28 points. 62 days after our first conversation, his score was 659. He qualified for a conventional loan, not FHA. Lower monthly insurance, better pricing. He closed on a $310,000 home. You see, his initial instinct had been to apply immediately at 601, but those 62 days of patience saved him more than $150 a month for the life of the loan.
What do most people miss when they're trying to improve their credit before buying?
Yeah, regarding improving their credit, most people miss is they focus on the wrong things. They close accounts thinking it helps. It almost never does, and it can hurt by reducing available credit and shrinking credit history length. They open new accounts thinking it diversifies their profile, which is a minor positive that's far outweighed by the hard inquiry impact on the short term. The most common mistake I see is opening a new credit card or financing furniture right before or even during the mortgage process. That hard inquiry alone can drop a score 5 to 10 points. So during underwriting, it can create questions that delay or derail the closing. The 90 days before applying, the rule is simple. Don't open anything new, don't close anything old, pay down existing balances, and pay everything on time. The score will move in the right direction on its own.
What's the most costly credit mistake you see buyers make?
Yeah, the most costly mistake they can make is applying for a mortgage with errors still on their report. Errors on credit reports are unfortunately more common than most people realize. An account that isn't yours, a late payment that was actually on time, a collection that was paid but not marked as such. Every one of these errors is dragging the score down, and many of them are removable. Before you apply for a mortgage, check your credit report and actually read it. If something looks wrong, dispute it. This process can take 30 to 45 days, but can move a score significantly. The buyers who apply without reviewing their credit reports are often the ones surprised by what the lender finds, and sometimes it costs them the deal.
For someone watching who has credit concerns, how do they connect with you?
Yes, someone with credit concerns that wants to connect with me can take my home loan quiz on my website. There's a specific path for buyers in the credit preparation stage. I'll respond personally with a real assessment or reach out directly. I'll tell you exactly what's affecting your score, what the fastest path to improvement is, and what you qualify for today versus in 60 or 90 days. Your score is fixable. The question is just how fast.